Welcome back, Trader Troops. So today I'm going to tell you how stacks can make you some stacks. Also, if I sound a little nasally, it's because I have the flu, and yeah, we're not doing too hot today. But I'm going to run you down through the technicals on STX or stacks, show you where I think it's headed and where I think it's going. If that sounds good to you, just make sure to smash up that like button and subscribe and hit that bell notification icon if you're new, because I post the latest and greatest cryptocurrency technical analysis on the internet, and I do it in real time, so it's very easy to miss these updates. So let's talk about STX or stacks. So the first thing that I want to show you guys on the weekly time frame is some targets. Okay, so the targets for STX stacks is going to be roughly $3.47 and between $3.31 and $3.47. The reason for this is because if we take a look at the weekly time frame, we do actually have an ABCD pattern. If I can find the tool, an ABCD pattern going from all the way from pretty much the all-time low as far as this data is concerned until this point right in here, which is $3.32. That represents an equivalent move higher of this bull run projected off of this low here. If you don't know how to use the ABCD pattern, I do have an absolutely free video on it, link in the description down below in the Measuring Markets program, completely free, so feel free to check that out. Okay, so we have an ABCD pattern completing at $3.31. We're currently trading at roughly $2.65, so we have a target of roughly 25% higher. So we have room to grow of about 25%, which is not too bad. If we drop down to a daily time frame, okay, what we're going to see is that we have more ABCD patterns. Okay, we have an ABCD pattern on the daily time frame from this swing high right in here. That completes at roughly $3.47. So again, giving us an area where probably stacks should be able to reach fairly easily, and we're going to get into that in a second here. Okay, but we have this area right in here, again, between $3.47 and $3.31, about between 25 and 30% higher. So if you're holding stacks, that's probably where I personally would be looking to take some profits. Now, let's talk about where we currently are in price on stacks. Okay, we are currently retesting all-time highs, so of course we're going to see some adverse reactions on the selling side of things. Okay, so the area of resistance to watch out for right now is between $2.65 and $2.80. Now, there's a reason why I think we should be able to reach these higher prices pretty easily, and that is because we have all the signs of a level of resistance being weak. What are those signs? Well, we have high volume with a very large green candle, so that shows that we have a lot of momentum going into this level of resistance, and it's kind of like ramming through a door. If you just walk up to the door and slightly tap it, obviously that door is going to hold, but if you charge at a door and you hit it with all your might, then that door's at least has a higher probability of breaking down, right? Same idea with this price action that we're seeing here. Also, if we take a look at RSI, the RSI indicator tells us that we are still not overbought. We are currently sitting at 66. Overbought is above 70. So if we can get above 70, yes, maybe we will start to need to weaken a little bit. But right now, we're not even above 70. We're still not overbought. And therefore, we have more room to run. So there's plenty of room to run, and we have a lot of momentum on our side. So we're going to be looking for this level of resistance to break, see if we can get a test of $3.47, this area in here. If this area starts holding up, you may want to start taking some profits, but for right now, everything's looking decent as far as while I'm recording this. And in fact, if we wanted to drop down to a lower time frame like the 4-hour chart and we wanted to look for an entry point, okay, personally, not financial advice, but personally what I would be looking to do is look at this level of support right over here. Okay, we can see that this area has been a major reaction area for stacks in the past. Okay, multiple reactions in this general zone between $2.50 and $2.33. So what we may end up seeing on stacks is a slight pause because we are in a level of resistance, a slight pause followed by a pullback into support, followed by a continuation higher. And this would definitely make a lot of sense because it would just be a continuation of this momentum and people buy the dip before the next bull run higher. And if we do manage to buy in the $2.50 region, then our targets become a little more profitable between 33% and 40% rather than that 25% and 30%. So be on the lookout for these key levels and everything that I just said. Make sure to smash that like button and subscribe if you're new, and hit that bell notification icon. I can't tell you how important that bell notification icon is because we do post in real time. Also, if you're interested in learning exactly how I trade and everything that I know, feel free to check out the Measuring Markets program, link in the description down below. Thank you guys so much for watching, and I'll see you in the next video. Peace.